Hey traders and investors, it's Serge Berger here. In today's video, I want to go through a potential upside play in Apple, a counter trend trade, and give you guys a little bit of perspective of where the stock is. First of all, let's keep in mind that Apple is 30% off its highs from 2015, 30% roughly, okay? So by definition, it's actually in a bear market. I don't understand why people are trying to defend the stock so much when the economic reality is that any given stock, even the most bullish stock in the world from a growth perspective, ultimately can retrace 30-40% at some point. Okay, Apple's done this before. I don't understand why people are trying to fight these dynamics, which are actually very healthy for the company. I'm very bullish on Apple through the long term, but we have to understand that the Apple, along with the broader U.S. equity markets, are going through a corrective phase here. So let's understand that dynamic first of all. Second of all, Apple, again, 30% off its 2015 highs on this multi-year chart is now starting to come into or it has actually been for some time and for a couple of weeks now, sort of meandering around this big picture support area where you can see there's a lot of price action. Okay, very simple and very straightforward. There's no reason to second guess this stuff. There's a lot of support here, and I do think there's an oversold balance necessary in order for us to ultimately break somewhat lower. I still think the stock can go towards 80, 85 bucks or so, which would then actually satisfy a 61.8% or roughly so retracement of that entire sharp rally from 2013 up until last year's highs. Okay, so keep that in mind. So it's silly to become really bearish right now. Okay, because the reason the time to be bearish was at the top here in 2015 when we had a series of bearish reversals, or at the last bearish reversal, which took place basically last December. All right. So after the earnings report right now, a lot of analysts are coming out and are being bearish or downgrading the stock, lowering their price targets, which are still well in the mid 100s. It's just very sad to see. So don't be one of those people that makes it too complicated and backward looking. So that's number one. Now, if we look at Apple a little bit more close up on the daily chart, you can see that for one, the stock is getting quite removed away from its medium to near term moving average. So the MACD, which is one of the things I like to look at for something like an Apple, is really getting quite stretched. We're at a level now that we last saw roughly last August, and that of course led to a bounce. Doesn't mean we have to see equally sharp bounce, but it's silly to be bearish and shorting the stock down here. The stock is going to be much better short a little bit higher from here. Maybe we'll show you the measurements here in just 1 second. So that's an important thing to understand. So from a momentum perspective, we're very oversold, and it's silly to sell here when we probably have a much better odds of a rally of selling it a little bit higher. So the trade that I'm looking at more specifically, if we look at the 8 and 21 day moving average, which are the near term moving average, you can see that the stock is basically, except for a couple days last week and early this week, essentially been trading below its 8-day moving average, which is this blue line, since you can do the math, since basically early December of last year. So that's quite an extensive period of time to be below that moving average. If we look at Apple more near term, you can see what's taken place here. After earnings this week, the stock dropped, but it's once again on a daily closing basis been able to hold those mid-January lows. So that's a pretty positive thing to happen. What I'm looking for Apple to do is give us one confirmation buying day, which we haven't really seen post earnings yet. And if the stock can give us a daily close, preferably above 96, 96.50, then it's basically going to confirm that low from earlier this week. In which case, I think the stock could fairly swiftly start moving higher, and at the very least, start filling that down gap from the 27th, so early this week, and possibly even get back into the mid, like 103, 104, 105 area as well. So that's what I'm looking at. And again, the stop, of course, would be very much the lows of this week. So somewhere in the low to mid $92 range. Hope this makes sense, guys. Please subscribe to my channel, like the video. That's how I move up in the YouTube ranks. And as always, I'll see you in the next video.